live. Uh-oh, uh-oh. Get that out of there. Get that out of there. Okay, get that right down there. Get that out of there. Live and live and live and live and live, live. Live, 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 live. I think we're all ready to go. Alrighty, alrighty. Uh-oh. Huh. Well, here we are. Here we are. Hey, my favorite show is on. What's going on? What's going on? All right, all right. So we are good there, there, and down here. All right, what do we have? What do we have? Let's go to the beginning. Uh-oh, no. That's not right. That's right. There we go. And there we go. And there we go. And that's right. And all the way back to there. All the way back to here. Who do we have here today? VJ and Nike. Rich Scannion. What's happening there, Rich Scannion? Willie, J. Dell, Eric, Preston, Lou, good evening. Argos, Bradley, Casanastra, Ron, my favorite show's on. Rich Bruner, good evening, good evening. Rich, didn't you mention you live in Texas? I'm actually flying to Texas tomorrow. Joe, Duran, good evening. Sonny, Jerry, the Bee. Eric, yes. Odem. Oh, I can't even read that one. JKRSCJMBVCJI. What the hell kind of name is that? Mike Cato. What's happening there, Mr. Mike? Right there. Okay, Odem, Matthew, New Jersey 78. What's going on? Matthew Lavergne, is that right? Uh-oh. Nanny, question, is this more profitable than investing into a Roth IRA? It depends on how you look at it. Freckled Queen, back again. How are you doing? Rob Morris, how are you today? Taco Eater, back again. New Jersey. Can we look at Verizon? Why would you want to look at Verizon? We looked at it yesterday. We looked at it this morning. It just didn't look good at all. Dropping again. We're at 39. What is it? 39.84. The $40 options really not going for that much. Let's get it right over to here. Yeah, the $40 option's only going for 23 cents. That's just over 50.55. Not enough. No. Oh. Can you explain a bit more? Yeah. Care to explain? Okay. Basically, you're new here, so this is what we're trying to do. We're looking for a simple, safe, predictable, consistent 1% per week. Yes, I know that's over 50% per year. Now, it's a 10-minute trading strategy that I created for my 9-year-old daughter about 15 years ago, back in 2008. She said to me one day, Daddy, what are you doing? Can you teach me? So in order to teach a 9-year-old simple, safe, predictable, all that kind of nice, neat stuff, we had to come up with 5 simple rules. Okay? 5 simple rules. Rule number 1, never buy something you do not want to own long term, because you just might have to. Not our intention. Our intention is a safe, predictable 1% per week. But if we have to hold it for a long period of time, I want to be able to profit off of it nicely. Thank you. No. That was 2008, a long time ago. Black Swan event. I'm not liking Campbell's soup debt, but that dividend is nice, and I feel like it could come back. All right, sit tight. We'll take a look at Campbell's soup in a bit. Let me finish explaining. So the 5 rules. Number 1, never buy something you don't want to hold, because you just might have to, or you just might get to, depending on how you want to look at it. Rule number 2, never sell at a loss. It defeats the purpose of the game. And yes, it is a game. And if you follow rule number 1, rule number 2 should be relatively easy. Because once you buy something, it's yours. Buy it with the intention of keeping it. Rule number 3, make sure the company is consistently profitable. Now, we're going to look at a bunch this evening, and I'll show you exactly how to find that out, whether or not that's of interest to you. Rule number 4 is weekly options only. So if you didn't know, we do weekly call options. So it is stock options. If you don't understand them, they are very simple if you understand them. Okay? Rule number 5 is make sure all the numbers work. Now, we're going to get into some examples. We're actually going to do some sampled trades. I'm going to walk through every single step of the way. You guys have a question, please feel free to ask. That's why we're here. We're here to share knowledge, share information. I promise you I'm not going to try to sell you anything at the end of the night. It's just a simple, safe, fix that drywall, man. Dude, there's nothing wrong with my drywall. Nothing wrong with my drywall at all. And focus on what we're talking about. Don't worry about my drywall. There's nothing wrong with my drywall, okay? Thank you. Useful hobbies, all right. Need some mud and paint. No, it does not. You may not like the color, but I'm okay with it, all right? I'm not like, all right, we did that one already. What else we got? Romero, good evening. Teddy, John, DK Express, Stray Cat, Charlie. What's going on? Jezik, Sam, Max, Tony, Michael, Dawn, Frosty. Okay, here we go. All right. Aim and never mind. You good, my bad. Thank you. Thank you. You may think there's something wrong with my drywall, but there's not. The only thing you can see is probably... Oh, that's orange. What color? What? You're not going to see anything there. Nope, you're not going to see that. It's a whiteboard. From here down is a whiteboard. Screw to hold it in. Wire for the computer. Another wire for the cable. Other than that, there's nothing wrong with my wall. Nothing. Nothing, nothing, nothing. Ooh, American Airlines. We'll take a look at that. Keanu Reeves. I find that very odd to think that Mr. Keanu would find his way here. Now, someone pretending to be Mr. Keanu, that I do believe. But anyway, Eric Bitto, we'll take a look at that. Oh, nice. It's a whiteboard. Yeah, it's a whiteboard down here. Granted, I haven't used it, but it is a whiteboard. Eli Lilly. All right, we're going to stop this right here and pause for a second. Keep more likes. Okay, Kiana Danielle. Interesting name. Cool. All right, so that being said, let's get the ball rolling. Can dividend stocks support me? It depends on what you need as in support. It's always a numbers game, Frosty. Okay? How much do you need? Need, not want. There's a huge difference between needing and wanting. There's only 3 necessities in life: food, shelter, clothing. Those are the only necessities for life. Okay? Telephone, computers, car, Gucci bag. Yeah, that's all what do you call that? Luxury. You do not need it. Okay, that being said, let's get the ball rolling. First one we're going to look at tonight will be American Airlines. Jennifer, American Airlines. Now, we just looked at Verizon because I don't like it, only because the current price is $39.84, and if I'm going to buy that tomorrow morning and turn around and try to resell it, the 40 is only going for 23 cents, which is a little bit above 0.5%. Now, don't get me wrong, 0.5% per week is not that bad. It comes to 26% per year. Not many people can get 26% per year. Now, Frosty, while you're there, give me an idea of what you need on a weekly or monthly basis to live comfortably, and give me an idea of what you're working with. Hello, when you do a covered call, how many should you buy? It's always going to be a personal preference because we all have a different journey. If I have $3 million and you have 3,000, I'm going to be buying more than you. It's just, that's the way it is. Okay, so we already looked at Verizon. It's going to be a no for this week. Don't get me wrong. I like Verizon. It just doesn't look good. So next on the list is going to be American Airlines, AAL. There we go. Oops, wait a second. Put it right there. AAL, there we go. Now, American Airlines don't look that bad. Here's the high, here's the low, here's where it was a year ago, here's where it is now. It dropped, shoot up, going sideways, up. We're sitting at 16. Well, the $16 call option is going for 44 cents a share. And for those of you that are new here, I'm pretty sure you're thinking 44 cents a share is not a lot. But here's the thing. You're comparing the premium to the stock price. And the stock price is $16 and the premium is 44 cents. That's almost 2.5% for 1 week. Now, 2.5% for 1 week is more than a 100% return by the end of the year. And that's what we're looking for. Simple, safe, predictable trading strategy. I try one, it wouldn't let me. Okay? A picture's worth 1,000 words. You tell me you tried one and it didn't work. I'd have to see what it is you're doing in order to say what you're doing correctly or what you're doing incorrectly or where you might want to focus some of your energy. Black Swan, do you typically discuss the financials of the company to satisfy your first few rules? No. Black Swan, it's an excellent question. His question was, do I typically discuss the financials of the company? Well, the reason why I don't discuss them is here you go. You ready? Now, we check every single week. This week, there's 10,791 different companies. That's a lot, 10,791. Out of all of those, only about 300 fit the criteria in which I'm looking for. Now, Black Swan event, what I'm looking for specifically, consistency of profitability and weekly options. That's it. Now, when I say consistency of profitability, I'm talking 2 decades. That means 20 years. 20 years of consistently being profitable over and over and over again. Okay? Now, once I find out what stocks those are, and those get right to the point. Okay? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then anything on Warren Buffett's list. Those 5 lists right there will give you about 300 companies that are consistently profitable. That being said, if and only if they make my list from there, do I check out the earnings per share, the book value, the revenue per share, what statistics that I need in order to satisfy what I'm looking for. Nowhere, man, 007. Marius, Shannon, Emil, good evening. Techie Freelanson. Okay, freelancing. Okay, whatever. All right, whatever. All right, so that being said, let's get the ball rolling. We're looking at American Airlines, down, up. That's basically what she did. 16, the 16 is going for 44. The 44 is more than 2%, which is more than 100% return for the year if you get 2% every week. Hey, Mr. Unemployed, back again. All right, I like the number. Let's look at the last 30 days because the last 30 days is going to give me a good idea of where do I think it's going next. Think about it. The best way to figure out where it's going next is by looking at where it is now and where it is trending. Okay, so 30 days ago we got the bottom. Okay, a couple of days ago we got the top. She shoots up, pulls back, shoots up, pulls back. Right here, the $15, $16 area. If you like American Airlines. If you like American Airlines. Remember, rule 1, never buy something you don't understand or you do not want to own. So if you don't want to own American Airlines or you don't like them for whatever reason, don't buy it. It's actually that simple. American Airlines earnings next week might influence buyers this week. It might, Richard. Thank you. All right, so let's take a look. If we're going to do the 16, and we're going to do a covered call, anytime you've seen any videos of mine, they're always the same. Hey, everybody, my name is James. This is Dividend Stock Talk. brought to you by the 10-Minute Trader, where I look for a simple, safe, predictable, consistent 1% per week. The videos are all the same. And I'm going to explain to you all that as we progress. Alrighty? So, 16. The 16's right here. We're going to buy it right there and see what the numbers look like. Now, the reason I do a covered call, because it's simple, it's safe, it's predictable, and it's consistent. Okay? When I say consistent, I mean I can do it every single week. 16 January. Let me go over this side. 16 January. That's this Friday. 23 January. That's next Friday. I dropped that thing. 30 January, it's 2 Fridays away. 6 February, 3 Fridays away. 13 February, 4 Fridays away. 27 February, 5 Fridays away. Every Friday there is a weekly stock option getting ready to expire. So I want to do it every single week. I'm going to be 62 in a couple of weeks, which means I finally qualify for Social Security. But here's the thing. My Social Security is only like $590. That's it. Can you imagine that? I've worked over 50 years of my life, and I only qualify for 585, 85, 95, something like that. Less than $600. Don't get me started on politics, why illegal aliens come in here and get more than I get. I've lived here my whole life, and I've worked in the American economy for over 5 decades. You have no idea how much it pisses me off that someone walks across the border and they get more money than me. I worked here 5 decades, a half a century I worked here. What do I get? $595. What does an illegal alien get 3, 4, 5 years ago? Yeah, definitely not fair. Don't get me started. Tony, good evening. K-Van, Harry Ford, good evening. Doug, Dr. Attendant, Samir, Joel, good evening. All right, that being said, let's do a covered call on American Airlines. See if it makes the list first thing this evening. There we go. Let's do this. I put a couple 100,000 into crypto. No, your shirt says the best. Stay away. All righty. Okay, so here we go. We're going to do a covered call. We're only going to do one contract. That way you guys don't get scared away by the big numbers. And we're going to do it at the market price, because the difference between a market order and a limit order. Now, you've heard it probably, if you've been investing for a while, you probably heard, never buy at the money at the market at the beginning of the day. That's the only time I buy, because I have better things to do. I could do a market order. What do they get? Endless energy, I have no idea what you're looking for. Endless energy, what do they get? What does that mean? Dr. Attendant, sorry, but after that rant about immigrants, I'm out. Well, you have a good time with that. Honk Aviation, okay, love your show. Thanks for always for playing it straight. Yeah, I don't play it, Anyway, you believe whatever you want to believe, okay? All right, buy one covered call American Airlines. 16 January 26, which means that is this coming Friday. The $16 call option, $46 is the profit for one contract. One contract is going to be $1,500. What rate of return is that? Okay, what rate of return? For that, we're going to find out the calculator. Calculator. Basim, I tried to download your dividend calendar, but it's not working. Thank you, Basim. You a fan of Ice, James? Oh, don't get me started. Don't. You don't want to drag me into politics. You really don't. 46 is the profit. So what we're going to do to figure out the rate of return, we take the profit and we divide it by the cost of the trade, including commissions and fees. Okay, that will give us the rate of return. Bry's in the house. How's it going, Bry guy? So to figure out the rate of return, you take the profit divided by the cost of trades. So this one contract is $1,554 for a grand total of 2.9%. That's just shy of 3%. Think about it. 3% a week. That's 150% per year. That's doubling your money within what, 9 months, 10 months? What's wrong with that? So I'm going to save this one. And we are going to save that one. There it is. By one covered call, American Airlines. 16 January. That's this coming Friday. The $16 call option. The $46 is the profit for one contract. If you can afford 5 contracts, 15 contracts, 24 contracts, it's all up to you. K-Van, I got me some Dell this morning also. Way to go. $1,500 is the investment. Well, for a $1,500 investment, I'm getting almost a 3% return on this one trade. Now, I know for some of you, 3% is not enough. Well, if 3% per week is not enough for you, you're definitely in the wrong place. Now, I don't want to scare people away and say, hey, you're better off going someplace else. But if 3% a week for 5 or 10 minutes a day is not enough, you're definitely in the wrong place. Need some mud and paint? Yep. Right, okay. Get me some Dell this morning. I did too. How much silver did you scoop up? Not yet. So it's covered. What do you own? What do you own it at? Oh, well, wait, Black Swan. We're talking about tomorrow morning. This is opportunities for tomorrow, not today. Tomorrow, the current price is 16 bucks. So if I buy first thing in the morning at 16 bucks, I turn around and sell someone the rights to buy it from me at 16 bucks. So I'm paying 16 bucks for it. I'm selling it for 16 bucks. No, I'm not buying the call. I'm selling. I'm buying the stock, selling the call. 80% of all options expire worthless. So why would I want to buy? I don't want to buy if 80% of the time it's going to go belly up. Okay, I want to sell. Because if I sell 80% of the time, I'm going to be right. And that works for me. Basim, thank you for that. Like, gotcha. You're buying and immediately selling the call. Absolutely. You got it? It's not that difficult. Glad you got it. All right. Did you invest in the index? No, I don't do index funds. I'm sorry. There's not a single index fund that gets over 30% per year that I know of. If you know an index fund that gets over 30 to 40% every single year for at least 2 decades, I'll be more than happy to listen to it. But as far as I know, none of them do. All right, so we're going to hold on to American Airlines. That works for me. I'm going to write that one down. All right. I sold 3 calls on American Airlines today from your observation last week. Well, thank you there, Richard. It was an observation. It was not a tip. It was not a suggestion. But thank you for that. Eric wants to take a look at Bitto. Tommy, are you only buying options that expire in the current week? Tommy, I don't buy options. I sell options, Tommy. Okay? 20% of options actually win. 80% of options actually expire worthless. So I don't buy them. I sell them. Do I use the wheel strategy? No, I do not. Too many working parts. Too many things could go wrong. Don't get me wrong. The wheel strategy is a great strategy. It is. I just don't do it. I just like covered calls. It's easy. Greetings from New Jersey. Yeah? What exit? So what do you do if AAL takes a nosedive just holding the shares and selling calls? Absolutely. Absolutely. Delete. Get out of that. Get out of this. Get out of this. Get out of that. Go over here. Now, when you say take a nosedive, do you mean Black Swan event? Do you mean like going from 19 all the way down to 9? That's a 50% drop. Is that what you're talking about? because that's exactly what stocks do. Goes from the high and it drops down. Then it goes up, then it goes down, then it goes up, then it goes down, then it goes up, then it goes down. That's all they do. They go up, they go down. That's it. Your best bet is to get in front of it. When it hits the bottom, turns around, goes up. Because as soon as she hits the bottom, I look for 2 days to the upside. And then on the third day, I jump in. That's my goal. That's what I'm looking for. Eric wants to take a look at BITO. All right, Mr. Eric, BITO, B-I-T-O. Okay, same thing, BITO. Here's the top, 26. Here's the bottom, 12. That's more than a 50% drop. When you're selling calls, what is the expiration range you use? 5 days. Mr. Riley, good evening, good evening. Jumps up, drops, up, down, sideways. Right here, 26.69. Let's zoom into that, see what's going on this week. What happened last week? Where do we think it's going to go next? Here's your last 30 days or so. Shoots up, pulls back. Shoots up, big gap down. Shoots up, pulls back. 2 days to the upside. Okay? Thursday was your bottom. Friday was higher. Today was higher. That's 2 days from this bottom here. Here's the bottom of the 30 days. She goes up, pull back right there. You can call it profit taking. You can call it pullback. You can call it correction. You can call it whatever you want. Okay? She shoots up to 1320, drops down to 1240. We got 2 days to the upside. One more day. If she opens up higher tomorrow, that's a cue for me to jump in. So I'm going to write that one down. Okay. Now, let's take a look at what is BITO paying if we like it. Well, it's at $12.69. The 12.50s are going for 30 cents a share. So that is over 2%. That works for me. I can definitely tell you're a seasoned veteran, my friend. Thank you, Black Swan. You're looking for 1% or better on a weeklies. Absolutely. Why not? See, here's the thing. I've been doing it for over 15 years. Consistently 1% per week for over 15 years. I'm perfectly happy with it. And no, I do not want to change my strategy. And no, I do not want to look at anything else. Endless energy. When your options are called away, what are you doing to buy more shares? Market or limit. Okay, so endless energy. Anytime I do a covered call, I do it at the market as soon as the market opens. Because the thing is about a covered call at the market is the stock and the options are tied together. So I know exactly what my profit's going to be before I even do it. So endless energy. I need a good stock. I'll take a look. Wait a minute. We're going to look at it right here. And I'll show you exactly what I'm talking about. Okay? All right. See if I can get all these questions done. So we're going to take a look at this one at $12.50, which is paying 30 cents per share. Now, 30 cents per share on a $12 stock, well, that's over 2%. Well, let's take a look. Get rid of this. Let's change this to covered. Look at the $12.50 right there. One contract at the market. Now, the reason why I want to do it at the market is because it tells me exactly what my strategy is right there. Okay, buy one covered call BITO. 16 January 26. That's the option that I'm selling this coming Friday, 4 days away. The $12.50 call option. My profit, $19. Now, don't get scared away about the $19. That's the profit. Okay? But it's only costing me $1,200. So find out what the rate of return is and then ask yourself, does it make sense? Do I like this company? Does this sound like something that I can dedicate 5 or 10 minutes to every day? Because think about it. If you get a cat, a dog, a turtle, a fish, a bird, whatever, you got to feed it, water it, tend to it every single day. So why don't you do it with your money? Because your money, if you do it right, is going to be with you a hell of a lot longer. Unless, of course, you get a parrot. They can live up to 75 years. Imagine buying a parrot. 75 years. Holy cow. Anyway, so here we go. Let's get the calculator. What rate of return is this? If the profit is $18.50 per contract, and each contract is costing $1,232, that gives me a return of 1.5%. Well, if 1% per week is over 50% per year, 1.5 has got to be at least 60 or 70% per year. So why the hell not? Going to save that one, put it on our list, see what you think. Give it a second or two. There it is. Beto, 16 January, the $12.50 call option. $18.50 is the profit, $1,200 is the investment, making it a 1.5% rate of return for 4 days. There's 52 weeks in the year. If I can get 1.5% this week on Bitto, if you like it, why not? Can you discuss how these orders are being filled if you're setting them up after hours? Okay, Black Swan, you do realize this is just an example, correct? So first thing tomorrow morning, if I was going to do this order, first thing tomorrow morning, 9:30 a.m., that order would fill automatically. If you do a market order, first thing in the morning, that will fill. The market maker will buy the shares for me, and it will sell the options for me, and I will get that profit per contract. Now, $1,200, me, I'd probably get 25 or 30 contracts. First thing in the morning, that's simple, safe, predictable. Remember I said simple, safe, predictable? I know exactly what my profit's going to be. I know exactly what I'm investing. I know what my rate of return is going to be before I even do the trade. So the only question is now, how many do I want to do? And the question you should be asking yourself is, number one, does it make sense? Buy a good quality company, sell it to someone for the exact same price you just paid for, and collect the call option premium if it's more than 1%. And if I can buy it for $12.50, sell it for $12.50, walk away with 1.5% every single week, I will do it every single week. Oh, wait a minute, I already am. All right, hold on. You're new here. I got something to show you. Does the market ever fluctuate significantly before the opening? I'm just curious, and I appreciate you. Okay, Black Swan, in fact, I got something to show you. Tight for a second. Let me get rid of this. And we said 1.5%, right? All right, 1.5. All right. All right, so you're relatively new here, so you haven't seen this stuff. So sit back, relax for a bit. I want to show you something. Let's clear this up first before we move over to show you something that you haven't seen yet, because I definitely remember that name. All right, so Black Swan, what we're going to do is going to go over to my website, The 10-Minute Trader, which is kind of funny because you're on The 10-Minute Trader TikTok account. Okay, so the10minutetrader.com is my website. There you go, right there. Go up to the little hamburger up on the top. Click on that right there. Okay, weekly trades 2024. Let's go check that out for a second. Something I want to show you there. Okay. First thing you're going to see is my social media. That's all that stuff. Okay, we're going to slide all the way down. Yep, these are all the trades for 2024. It's not what I wanted to show you. This is what I wanted to show you right here. Okay. Week 1, quarter 1, week 1, January 1st to January 5th, 2024. Click on one of these. These are all the trades that I made. Okay, 1,000 shares of CVS, 79.49, sold to 79, bought a buck. What is that? That's $1,000 for that one trade right there. It's not what I want to show you. What I want to show you is this right here. That right there, Black Swan. You see that? Starting date, August 31st, 2011. Now, I've been trading a hell of a lot longer before this, but 2011 was when I was introduced to blog posts. Do you remember blog posts, anyone? Yes, I did a blog post in 2011. How do you choose the strike price and expiration date? You've got to be kidding me. All right, you're new here. I'm going to let you slide on that one. Okay. All right, so Black Swan, check it out. 2011, 2012, 2013. Look at this, 2013 right there. Gives you an explanation of all the trades that I do. So basically, my blog post was weekly. I did it every week until video came out. And video came out, let's slide up to the top. These are all the trades I did for the year. Come on. Okay, what I'm going to show you next, Black Swan, something you haven't seen yet. We're going to YouTube. Look at, we got 2 lives on YouTube. That's not what I want to show you. Right here. Videos. Right there. And we want to go to the oldest videos. And there's the little princess right there.
Hi, I'm Jake, and as being part of my internet like company, which my dad doesn't let me call
mute that.
But I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4.
That's me, 15 years ago. I think it's 16 years ago now. I don't know.
What does that mean? That means every single day you can buy a different stock. Every single day there's a different.
Here's my favorite part. Ready?
Yeah. Seriously.
Okay. You got to remember, she was 9 years old when we started. That's her when she was 11. That was a couple of years after we've been trying it. So to make it fun and exciting, I had to do all kinds of crazy stuff. So yeah, me and my daughter, back in 2008, I started teaching her how to trade. Simple, safe, predictable, consistent, no way for her to lose. That was the strategy specifically for her. So for you guys, it's basically the same thing. Okay? Basically the same thing. Number 1, never buy something you don't want to own or something you don't understand. That's rule number 1. Rule number 2 is never sell at a loss. It defeats the purpose of the game. And yeah, believe it or not, it is a game. Let's get out of there. We don't need to see that anymore. Rule number 3, make sure the company's consistently profitable. At this moment in time, nobody's come up with a lemon yet, but I'm pretty sure they will. Every night, somebody asks me about a company that is not consistently profitable, and we will get to that when the time comes. But in the meantime, ask me anything you want. The strategy is sound. I've been doing it for the last 15 years, since 2008. Marcia, this is a place to learn about covered call options. Thank you, Up Down. How can I join? Oh, Marcia, you could DM me with your number. I'll personally give you a call. You and I can chat. Okay, now I'm not going to pawn you off to someone else and say one of the people on my crew will give you a buzz. I don't have a team. I don't have a crew. It's just me. Okay, this is just a hobby for me. It's not a business. It's not an enterprise. It's just me filling up dead time because I'm retired and I have nothing else to do with my time. So I'm going to share the knowledge that I have. This, believe it or not, this is just one channel that I have. I have a lot of knowledge up here, and I am planning on giving it all away before I take the next adventure. All right, so we looked at Bitto, we looked at American Airlines, we looked at Verizon. What else do we have? Okay, Apple user 24772933 wants to know, how do I choose my strike price and my expiration date? Well, Apple user, I'm going to tell you how I do it. How you do it is going to be totally upon you. Because remember, we are all different. We all have a different amount of money to play with. We all have a different amount of money that we're looking forward to trying to get. Okay, we all have a different risk factor. We have different everything. But what is the same is the math and the desire to find a profit safely and predictably. That's why we're here. So let's take a look at this right here. BITO. How do I choose my strike price? Now you're going to feel just a little bit silly when I explain this to you and the expiration date. Just a little silly, but don't feel bad about it because you're relatively new here. You don't know. But now you'll probably never ask that question again. Are you ready? The current price right now is $12.69. $12.69, $12.69, $12.69, $12.69. That's the current price, $12.69. So, how do I choose my strike price? What is the closest strike price to $12.69? It's $12.50. Right there. The closest strike price to my purchase price, $12.69. It's $12.50. How do I choose the expiration date? On Mondays and Tuesdays, it's always this coming Friday. Okay? So, today's the 12th, Monday. The closest, most profitable expiration date will be this Friday, the 16th of January. Now on Wednesday, if it was a Wednesday, we'd be looking at next Friday because 3 days is not enough, but 4 days is. Okay, so Monday morning, you got 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. Tuesday morning, we only got 4 days. Tuesday, Wednesday, Thursday, Friday. Wednesday, we have 3 days. Very challenging to get a full 1% with only 3 days left. So it's always going to be dependent upon what you want to do. Okay? Do you want to do the 3 days for whatever they give you? Or do you want to take it out until next week to get a higher rate of return? You can go out 3 or 4 weeks if you want. Because some people, hey, they want to buy the stock. So February 13th, which is 5 weeks away. Well, you'll get a bigger premium and you'll have nothing to do for the next 5 weeks. But see, I'm retired. So I have no problem whatsoever brushing my teeth, doing my hair, shaving, showering, changing my clothes every single day. So why won't I tend to my money every single day? Doesn't take long. I get up in the morning, I turn my computer on. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? Am I at risk? Should I do something? What should I do? They're really not that difficult questions because I can go take a look. That's weird. Okay. I can take a look at my position. Right click. View trade. What did I buy it for? $40.99. $40.99. What did I sell? I sold the 41s. Well, think about it. What's the closest strike price to $40.99? 41. Okay? Got 73 cents a share, which is not quite 2%, but it's over 1.5%. And that's for 1 week. So I did that one. All right, that being said, all right, hopefully that made sense. How do I choose a strike price? The closest one to my purchase price. How do I choose the date? How much time do I want? Do I want 1 week? Do I want 2 weeks? Do I want 3 weeks? Do I want 3 months? It's all different. We are all different. We're all looking for something different. You got to decide what you're looking for. All right, so anyway, let's touch on what Marsha had to say. How can I join? Well, Marsha, you can just email me or text me, DM me your number, and I can give you a buzz. Now, if you think you're having a conversation with me, email, text, WhatsApp, Telegram, Snapchat, you're not. I don't do any of that stuff. You want a conversation with me? Fine. Drop your phone number here, DM me. Because wherever you're looking, wherever you're watching, now I'm streaming on 9 different channels. 9 different channels. So wherever you are, whatever channel you're on, you can go right to the link in the bio and say, hey, give me a buzz. Send me your number and I'll call you. Me, personally. All right, what else do we have for questions? Hey, Dev's in the house. Snake Anthony, will your course teach you options just in general? Okay, what's that name again? Snake Anthony. Now, Snake Anthony, the strategy that I'm basically giving away here for free, okay, it's simple, safe, predictable, 1% per week, was created for my 9-year-old. We're just buying good quality companies and we're selling call options against it. Do I go into all stock options? No, I don't. Because for what you're getting here for free, why would you want to do that? I understand some people don't think 50% a year is enough, or 5 or 10 minutes a day is too much time and too much effort. Fine. Okay? But the books that I do are all basically written for my 9-year-old daughter. It needed to be simple. It needed to be safe. So I figured there's a group of people out there that want that kind of information. Because I didn't have it when I was growing up. I had to learn all this stuff on my own. All right, let's see what we have for questions. Useful hobbies. Oh, nice. It's a whiteboard. Ooh. John Nato wants to take a look at Eli Lilly. Isn't Eli Lilly a little bit pricey? Okay, we'll take a look at it. Hold on a second. Where is it? Where is it? All right, bit. Okay, John wants to take a look at Eli Lilly. LLY. LLY. Yeah, it's a little bit pricey for me, John. To be totally honest with you, John, I don't do stocks over $300. Okay, $1,080. $1,080. Eli Lilly is overvalued, even though they're really good. A good entry price would be $950 to $1,000. You ain't gonna see that for a while, brother. Think about it. Anyway, I'm gonna say no only because it's over $1,000. Number one, and it's way too close to the high of the year. Okay, the high of the year is right there. Now it's dropping. Why would I want to jump into it when it's at the high of the year and it's dropping? I received a question. Okay, I have no idea who that one is. All right, anyway. All right. Don't. Thank you for that, George. That's if you want cushion for long term. Okay, George, I don't do anything long term. What stock is on the screen? It looks strange. Sorry, Rich. It's Eli Lilly at the moment. I don't remember which one it was on there before you asked the question. John Nato. George, it's a good one. 32% risk-adjusted returns. Okay. No, I'm not going to argue with you, John, because, Eli Lilly's not on my list, even though it's a good company. The reason it's not on my list is I don't do $1,000 stocks. It's $1,080, they're paying 2%. I can get 2% on a $20 stock. Why would I want to put $1,100 per share? Think about it. It's $110,000. That's a lot. No, thank you. It's just a little too pricey for me, John. Alid, what indicators do you like? That's an interesting question. You ready? The indicators that I like: consistency of profitability and weekly options. That's it. Is the company consistently profitable? Great. I want to look at it. Do they have consistently been profitable for at least 2 decades? Great. I want to look at it. The indicator I use is the dividend. That's it. If the company's profitable, I want to look at it. Okay? If they have weekly options, I want to look at it. The indicator that I use is the dividend. Let me tell you why, Alid. Okay? Number one, the only companies I like are the Dividend Kings. That's 5 decades. Do you understand what 5 decades is? That's a half a century. 10, 20, 30, 40, 50 years or more of consistent profits. That's a good company. What do I do with it? I take it and I stick it into the calendar. The calendar will tell me when are they going to pay their dividend. That's the indicator that I use. Clorox, right here. Clorox is a 100-year-old company, dividend king. They've increased their profits for over 5 decades. What indicator do I need? Because if they have the dividend here, most of the time, stocks that pay dividends and have been paying dividends for a very, very long time have a tendency to be boring as hell. They do the same things week after week after week. They go up just before the EX date. After the EX date, they have a tendency to go down. So by knowing when the stock is paying its dividend, I have a good idea of when to buy it, because just before the dividend, the stock has a tendency to go up. And when it does, I want to jump in with a simple strategy to get my 1%. Andrew, hot dang, it's Eric Smazim's dad. Thank you there, Andrew. Not quite sure what that means. Do you like to roll stocks all the time? Yeah, it's an amazing stock. I predict it to go to 1,500 in the next few years. Yeah, you're definitely in the wrong place, dude. That's not what I do. Useful hobbies. Is it true in Holland they give a stipend to the handicap for lovemaking? It's disturbing, but okay. Ted got American Airlines this morning. Good for you. Tennis, 314. How you doing? Brady, I made 60 grand and I'm into finance. Should I day trade or swing trade or options? So Brady, I have no idea who you are. No idea what you're looking for. No idea how old you are. No idea how much money you work with. No idea what your risk factors are. I know absolutely nothing about you. So for me to tell you what to do with your money would be doing you a disservice. And I'm not going to do that. I don't give tips. I don't give advice. I don't give you stocks to buy. I'm just telling you what I'm doing and showing you what I taught my 9-year-old daughter. That's it. There are literally hundreds of guys just like me doing this exact same thing on a different social media channel. You just so happen to find this one. All right. Hopefully that made sense, Brady. Franklin, how are you? David Allen, thank you. Uh-oh. Lucky Charms wants to take a look at QQQ. I don't do the Qs, and I'm going to tell you why. And when you see it, you'll probably say, oh, shit, I ain't going to do that either. Well, hypothetically, that's what you should be saying once you see it. All right, so we're going over to Yahoo Finance. I tell you, everybody, if you are being financially responsible, you need to find a finance website to allow you to find the details that your trading platform won't do. So, that being said, we're here at Yahoo Finance. Here's Invesco's. Triple Qs. Let's see what it looks like. Okay, so here's the triple Qs. Now, who came up with the triple Q? Okay, Lucky Charms did. Take a look at this. The yield. The yield on the Qs. The yield. You understand what the yield is, right? You shouldn't be investing if you don't know what the yield is. It is 0.46. 0.4, not even 0.5%. Why the hell would you put your money into something that's paying 0.5% per year? Think about it. That's insane. 0.46. Yeah, no, thank you. Let's slide down a little bit. Oh, that's what's in the Qs. Okay. Let's take a look at historical data right here. Now, the historical data will tell us how consistently profitable are the Qs. What do I mean by that? Well, the Qs pay a dividend, and they pay it every month. Or is every quarter, I believe. Okay, here it is right here. Okay, the Q's, 627 bucks. Yeah, 627 bucks. Okay, so what I want to look at, historical prices. I want to look at the dividends only. Because if you did not know, then I want to look at all the dividends, well, at least 20 years of them. Now, what I'm looking for specifically when I look at the dividends, I'm looking Do they go up every single year? After year, after year, after year. Because what am I looking for? I'm looking for consistency of profitability. That means more money this year than they made last year. More money next year than they made this year. Every year, I want that number to get higher and higher and higher. Because the dividend is a portion, very small as it may be, but it's still a portion of the company's profits that they give back to us. And don't give me the crap that the Qs are not a company. I know that. But it is an entity in which you put your money into, in which they give you a rate of return. So it's kind of like the same thing. All right? So let's check out the dividends. And I want to look at 2 decades. Remember? 2 decades. Rule number 3, make sure the company's consistently profitable for at least 2 decades or more. Well, that would be 2006. And here we are, right here, 2006. Now, what we're going to do is we're going to take a look and see, is this thing consistently profitable, yes or no? Are you ready, Lucky Charms? Here we go. 2006, March 17th, 29, 26, 23. Hold on a second. Now, I admit I didn't go to college. I didn't feel the need. I went right into the service, and from the service, I went right into the workplace. So I didn't go to college, but I do remember in 3rd grade, Mrs. Flagg was my 3rd grade teacher. You believe that? I remember my 3rd grade teacher. I remember Betsy Garfield sat in front of me, Mike Galvin sat behind me, Tom Godfrey was over here, Jerry Ferrari was, yeah. Believe it or not, I got a good memory. But I do know March 17th, 29, 26, 23. That's going backwards. That is not consistently profitable. Okay? The number should be getting higher, not lower. But let's take a look a little more. 54, that's higher. 27, that's lower. 37, higher. 53, higher. 33, lower. 34, higher. 28, lower. 43, higher. 49, higher. 44, lower. 41, lower. 73, higher. 51, lower. 89, higher. 89, the same, no change. Ooh, 112, higher. 108, lower. 77, lower. 121, higher. 104, lower. 161, higher. 49. Do you see what's happening? It's not consistently going up. It's going up, it's going down. It's going up, it's going down. When I say consistency of profitability, should look something to this effect. Take a look at Microsoft, the last 20 years. Come on. Here we go. Microsoft, last 20 years, all the way down to 2006. 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Did you notice that, Lucky Charms? Every single year, the number got higher, 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 and higher. It's not up, down, up, down, up, down. They can't make up their mind whether they want to make money or they want to be charitable. No, I don't do companies that are not consistently profitable. Qs are not consistently profitable. I do not want to put my... I'm going to be 62 in a couple of weeks. I have no desire to try to figure out, well, am I going to make more money this month than I made last month? How am I, no, I don't want to do that. Okay, a fixed income is called a fixed income. It should grow over and over and over again, not decrease. What are you looking at this week? Oh, I'm looking at the dividend kings, the dividend aristocrats, dividend champions, dividend contenders. And of course, what's on Warren Buffett's list? Nanny. So with 100,000, I can potentially make 52,000 a year, give or take. Absolutely. Jennifer Doan, thank you so much for sharing your knowledge. You're welcome, Miss Jennifer. David Allen, it's losing value in the mattress. I have no idea what you're talking about, David. Color, you did 2% today. Good for you. Ali, doesn't it move slow? Yeah, a lot of things move slow. The continental drift is slow. I believe St. Petersburg gets closer and closer to Manatee County. I think it's like an eighth of an inch or a quarter inch a year. That's slow, but it's still, over time, it's consistent. So 1% a week may be slow, but it's still 50% per year. When is the last time you got 50% per year? How much do you invest weekly for the 1% ROI? John, do you really want to know that? I don't think you really want to know. Nanny, 2% is huge if that means doubling. Yeah, you're absolutely right. It is. Amen. Thank you for that. Severed, I feel like the aliens deserve that money. Oh boy, no. Nick, how you doing today, Nick? Neil, good evening. Hexel 79. What weekly dividend stocks? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on Warren Buffett's list. That's 5 lists. They give you 300 different companies. Cal, good evening, Cal. Sin, Big Tex 84. Holding it for a week, then selling it? Yeah, why not? Why do I want... All right, hold on a second. Now, you don't have to sell it in a week. Okay? What I like to do is I like to create what is called weekly cash producing assets. Okay? They just so happen to have names like Ford, General Motors, Home Depot, Lowe's, Bank of America, Wells Fargo, Eli Lilly, whatever. A good quality company. I buy it and I get a weekly cash flow from it every single week. Why covered calls on new stocks and not cash secured puts? I don't do covered calls on new stocks, David. I only do companies that are at least 2 decades of profitability, which they got to be at least 2 decades old, which is 20 years. Why not cash secured puts? I do cash secured puts once in a while, but I'm here tonight sharing one trading strategy. I mean, I could share everything that I know, and I can almost guarantee maybe 1, 2, 3% of you would understand everything that I know, but I seriously doubt it. How is your cash sweep? 14,000. How is my cash sweep? 14,000. That ain't it. Cash sweep 14,000. I have no idea. Oh, down there. Oh. Well, it's a new year, dude. Did you notice? Cash sweep is 14,000. Profit and loss year to date, 10,891. What are we in? Week number 2? Week number 2. And my profit and loss year to date, 10,000. You really want to do numbers? I don't want to do numbers. Okay, we're talking 1%. 1% of 100 grand is 1,000. 1% of a million is 10,000. 1% of 10,000 is $100. Okay, why are you paying attention to that crap? I don't mean anything. I got 7 different accounts. You're looking at 2 of them, I think. All right, hold on. Why covered color? We already did that one. Sevlid, why doesn't all the aliens crossing the border get... don't. What stock is that? That was Eli Lilly. We're not doing that one. Do SPY. No, I don't like SPY. It's almost as bad as the Qs. Okay? SPY. SPY. There we go. All right. Here we go. Right here. SPY. Dividends only. All the way back to 2006. Okay, 2006, right here. All right, you ready? Who came up with SPY? Cal, you ready? March 17th, 2006, 51, 55, 57, 79. That's pretty good. 55, wait a minute, that's backwards, that's down. 65, higher, lower, higher. higher, lower, 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 higher, lower. Higher, 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 lower, higher, lower, higher, lower. Do you see what's happening here, Cal? Not consistently profitable. So why do I want to do it? 61, higher, 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 lower, higher, 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 lower, higher, 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 lower, higher, 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 lower, higher, 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 lower. Do you see that, Cal? That's the dividends for SPY. Up, down, up, down, up, down. No, thank you. Mindy, NVM. What is NVM? I have no idea. Let's take a gander. NVM. Novum Group. All right. That's not right. Okay, NVM. No options. No, thank you. No options. No, thank you. Sorry. Oh, wow. Okay, you like that one? Cause and Astra, TDD. What is TDD? TDD. Trade Desk. Ah, Cause, come on. You've been here long enough. TDD. No options. No options, Cause. Oz. No options. It's Chris, 650. How you doing? Nini. 3% of 100,000 every week is 3,000 a week for 52,000 a week. You're right. But you're not going to get 3,000. You might get 3% every week. I don't even get 3% every week. I average, hold on, let's do this again. Okay. Okay, just out of the dark. Week 8, quarter 2, week 5, May 29 to April 29 to May 3rd. 2.55%, 2.9. I'm going to do that one. 1.27, 0.63. Ooh, I missed it. 1.07, 0.43. Ooh, yuck. 0.06. Yuck. 04. 07. 1.27. 3%. Oh, there you go. 3% right there. 2.8. Well, let's get out of this one. Look at 2005. We haven't done 2006 yet, but here's 2005 weekly trades. What do we got here? Week 19, May 5th through May 9th, 3.6, 1.1, 1.4, 3.1, holy cow, 3.6, 4.2, 3.8, 0.8, 4.4. So my average is all over the place, but it's right around 1.4% every week. Average, 1.4. So, you know, my goal is only 1%, but if I'm making 1.4, I'm okay with that. Andy, thank you. RV, how are you? Neil, lowest startup cost, you think? My grandson is starting out with $50. I think, hopefully sometime this month, we're going to start a new account for Robinhood for those who don't have a lot of money, which is $50. And it's just a couple of bucks every week, see how it works. It should be a slow process, but this is a long-term thing for us. How do you choose? We already did that one. Choose a strike price. It's Chris. I'm interested in NVTS. Why? Why the hell are you interested in NVTS? NVTS. Navitas. Interesting. Okay. Let's go and find out what the dividends look like for NVTS. NVTS. Hold up a second. Let's see how profitable is this NVTS. All right, there it is right there. $10.43. Oh, wait a second. There are no dividends. Okay, so let me ask you a question, and I don't want to be rude at all. The name of the show is Dividend Stock Talk. And the subtitle is Dividend Investing for Weekly Cash Flow. NVTS has no dividends, so why the hell are we looking at it? QBTS, never heard of that one either. QBTS. Give it a second. QBTS. There it is. Here it is. QBTS. 28 bucks. No dividends. Why would you come to a dividend investing channel and ask about a stock that has no dividends? I'm not quite sure why. No stock under 10 bucks has options, right? No, a whole bunch of stocks have 10. Hold on. Let's get out of there. Go to watch list right here. Okay, I don't know if you get how well you can see that, but the list, the name of the list is CBOE Weekly Optionable Stocks. Okay? CBOE Weekly Optionable Stocks. Look at this. 9 cents, 37 cents, 91 cents, $1.73, $2.32. There's a whole bunch of these things. Look at them. 198, 227, 268, 551, 598, 704, 930, 1072, 1187. There's a whole bunch of them. Look at them all. Look at all these companies. They're right over here. See them all? There's a whole bunch of companies under $10 that have weekly options. Tommy Cash. Thank you, Tommy. Black Swan, you're welcome. Thank you, you're welcome. Al, SRPT. What is that? SRPT. Does anybody know what SRPT is? Let's get rid of that. Let's do that. And let's do SRPT. SRPT. Okay, never heard of it. But let's go back to here. SRPT. SRPT. Let's find out. What are they? What is it? Sarepta Therapeutics. SRPT. There are no dividends. Why are we looking? Lemonade. Do you ever trade earnings in the other accounts? No, I don't trade earnings at all. I don't pay attention to earnings, Lemonade. The reason being, I don't pay attention to earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. So they're not as consistent as you would think they are. So I don't even bother with them. Mindy, that's a button of money. St. Samuel, what stocks are you personally interested in this week? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Niculator, I'm 59. I think you changed life. Oh, Niculator, you've been here for a while, dude. I would really like to have a chat with you. Drop me a number. I'll give you a call. Am I in New York? No. Thank you there, Cal. Michael Kelly, how are you today? Oh, why do I have a low battery? Low battery. All right. Michael Kelly wants to look at MKSI. What the heck is that? MKSI. Rich Bruner, I made my last 1% last 5 weeks in a row. Cool beans, Rich. For you guys who don't know, Mr. Rich bought his wife a brand new Porsche with the money he made. Yeah, he's doing rather well. Nice for you there, Mr. Rich. Now, Rich, I forgot. You guys are in Texas, right? I'm flying into Dallas tomorrow. I don't know how far away you guys are. Okay, well, let's take a look at this. MKSI, take a look at the dividends. 2004, oh, wait. Only 2011. 2011 to today? That's not 20 years. 2011, what is that? 13? No, 14 years. Close. Normal Seth. If you're working with 100K, do you put all of it in on one stock option per each? Oh, hell no. Seth, okay? 100 grand, I do 5 trades. That's 20,000, 20,000, 20,000, 20,000, 20,000. That's what I do. Coach JV, back again. How you doing? Haven't seen you in a couple of weeks. Can you explain with an example being to end, please? An example? All right, well, I was kind of hoping to get a decent stock. Let's take a look at this one right here. It's 11. It only has 15 years of dividends. So you have to decide, is 15 enough? Cal, more than 20% loss? I have no idea what that means, Cal. Explain if you could. All right, so if, I'm not going to do this one. I have no idea who it is. Let's take a look at one that is on the list today. Dell. Let's look at Dell. I did some Dell this morning. There we go. Mr. Dell. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up. It's at 120. The 120 is going for 260. That's more than 2%. Right off the top of my head. Let's see how much it is. Before we do, let's take a look at all of the numbers. Okay, remember I said rule 5, make sure all the numbers work. Okay, what am I buying it for? What am I selling? What am I collecting? Is the chart telling me it's the right time to buy? It's not that difficult. Anytime I look at a chart, I'm looking for 5 things. And these 5 things you should be able to see within 3 to 4 seconds. First thing I'm looking for, the high. It sticks out like a sore thumb right there. The second thing I'm looking for, the low, again, sticks out like a sore thumb right there. The easiest thing to find is where was it a year ago? Right there. Where is it now? Right here. Now what takes the longest amount of time is the motion of the ocean. Check it out. Up, down, up, down, up, down, up, down, up, down, up. Or you can just go down, up, down. Once I pass that, it takes 3 seconds for me to see that. High, low, was, is. That's it. Yes, let's go to the next phase. The numbers. Well, yes, that works. Now let's go to the next phase. Well, that would be a year ago, 110. We bottomed out in April, 66.94. We topped out at 169, and now we're sitting at 120. Simple. Not that difficult. The last 3 months, same thing. The top, the bottom, where was it? Where is it? Up, down, up, down, up, down, up. Okay, got your 2 days right there. The bottom is there, Thursday. Friday was higher. Today was higher. That's 2 days to the upside. I want 2 days to the upside, and then on the third day, I will jump in. So I would like to jump in tomorrow if it opens higher than it closed today. So let's take a look at that number, the 120s. Okay, change it to covered calls. Right there, the 120s, right there. Okay. Covered call, the 120, right there, buy. Okay. I want to change it from 10 contracts down to just 1. And then I want to come over here, change it from a limit to a market order. Market order. And then hit confirm and send. Now the reason why I'm doing a market order is because some of you might find this funny and some of you might not. The reason I like a market order is because I'm an American. We want it And we want it now. We don't want to wait. Isn't that, that's an American trait. We want it and we want it now. That is a market order. Because as soon as the market opens tomorrow, doesn't matter what the stock price is, I want to buy it and I don't care what it is. And the reason why is because the stock and the option are linked together. So I know my profit's going to be before I even do it. My profit's 221. How much is it costing me? 11,000. What is that rate of return? Well, let's figure it out. To figure out the rate of return, we need the calculator. We put the profit in first, 221. We divide it by the investment, which is the cost of the trade, including commissions and fees. It says it right there. And that is 11,779. 11,779, grand total of 1.8%, just shy of 2%. Now, does that make sense? Number one, do you like the company? Number two, do you like the company at this current price? Number three, is this something that you're willing to do? We'll save that one too. I like me some Dell. I do. I like me some Dell. I bought some this morning. Where is it? Where is it? Where is it? Come on, come on. There it is. There it is, right there. I'm sure you can see that now. Dell, 16 January, the 120 call option. 221 is the profit. 11,779 is the investment. 1.8% return for 4 days. 4 days. Thinking about it. And how long does it take you? Well, number one, you got to find out what stocks you like. And how do you find that out? Give me 1 second. We're going to get to that next. Let me just save this. Uh-oh. It disappeared. It disappeared. So I got to resave it. What was it? 1.8? Oh. There it is. 1.8. Now you know there's over 10,791 stocks that you can choose from. So we just found 3 of them tonight that actually fit. We found 4 of them last night that actually fit the criteria that we're looking for. Cause, CCCX. What the heck? Okay, Cal, did that explain it, Cal? Because we went through the whole thing from the beginning all the way to the end. Oh, let's get out of here. Let's get out of there. Let's get out of there. Let's go back to here. Let's go out of there. All right, there we go. More than 20% loss. I have no idea what that means, Cal. Roa. What's this stock? Dell. Niami. Thank you. You're welcome, Cal. Listen to him. Thank you there. Load flow dispatch. How you doing? Cal. They don't understand, sir. Sorry, think Ford, Coca-Cola, or Amazon. Let's check it out. Ford. Now, I'm going to say no to Ford only because we looked at it this morning, and I don't buy anything at the high. Sorry, dude. Ford's going to be a no only because it's at the high of the year. And I don't buy at the high of the year. It makes no sense to me. Okay? Now, I will take a look at Ford in about 2 weeks once profit taking is done and it comes down. Then maybe. Coca-Cola. Now, I think I got Coca-Cola 2 or 3 times, and that's going to be a no also. Only because 770 is going for 77 cents. I'm losing 50 right up the top. Means I'm not making my 1%. But check this out right here. Let's zoom into that. Okay, Coca-Cola had a nice drop, had the bottom here. 2 days to the upside. Look at your 3rd day here. She opened up high. She actually gapped up this morning. Now she's dropping. That right there could be the beginning of profit taking. Profit taking, the stocks come down. I have no desire to do that. Amazon, it's going to be a flat out no. Amazon doesn't have any profits, number one. Number two, they don't have any dividends. You talk to, what's his name? Jeff Bezos. He'll tell you right now, Amazon operates at a loss. But they operate so much that it works. How does the strategy work? One life. Very simple. You buy a stock, you sell it to someone else using a covered call. They pay you a premium, and that premium is over 1% a week. You get all your money back, and then you get your 1%. That's over 50% per year. So before executing these covered calls, we would need to buy the underlying. Yeah, absolutely, Tom. You got to buy the stock first. That's why it's called a covered call, which means it's one of the safest trading strategies there is, because you're selling a call option on something you already own. Nova Bay. Sam, Nova Bay, isn't that NVO? NVO? Nope. Wait a second. Thank you there. Thank you, Sam. Cal, thank you. Phantom, me. Okay, Christopher, James, Dell isn't 121 better. Okay, Christopher, I don't quite know what you mean by that. Dell isn't 121 better. What does that mean? Do you own that stock, Dell? Yes, I do. If it gets called before the EX dividend, yeah, so? All right, I think you're missing a part of the equation. Cal, the part, oh, wait a minute. What do you mean that didn't work? Right there. Cal, the part of the equation that you're missing, Cal, if I'm buying it at the current price, I'm selling it at the strike price, collecting this. Well, if somebody buys it from me at that price, I'm walking away with a profit, and I still get to keep that. If it gets called before the EX dividend. Yeah, I get that, Cal. Okay, I understand what you're saying, Cal, I do. But I really don't care if it gets called away. The stock is going up. If I buy it and somebody wants to buy it from me at the price here, fine, because I already made my profit. Why do I want to hold on to it longer if I've already made the profit that I'm looking for? I'm only looking for 1% a week. Okay, if they buy it from me before the EX date, great. I still made my profit. Now I can buy something else. Remember, there's over 10,000 different companies. And there's another one. Right? There's always another company right around the corner. Always. Eric, Jason, how are you? Cause, what are you doing over here? What are your thoughts on CPB or Campbell Soup? CPB. CPB. Well, I'm kind of hoping that's the bottom. She turns around. Now, we've been having an issue with Campbell Soup ever since the CEO got caught with his pants down, so to speak. One life, thank you for that. Uh-oh, Cal wants to talk about taxes. Cal, do you really want to talk about taxes? I mean, seriously, we're talking about making money. If you're worried about taxes, Cal, that would remind me of the gentleman who goes to the Rolls-Royce deal and says, hey, what kind of gas mileage does this thing get? If you got to ask, you shouldn't be playing this game, brother. All right, so Campbell Soup, the high, 44. The low, 26. Close to a 50% drop. But look what's happening here. Bottomed out on Thursday. Friday was higher, and today wasn't any better. But that kind of puts us into a situation where we got one more day to the upside, and then it's currently at 26. Well, the 26 is only going for 20 cents. 20 cents on a $26 stock is not something that I want to do. Thank you, Cal. All right, so what else do we got? Hey, Mikey G's in the house. What's happening, Mikey G? Procter & Gamble looks pretty good. You're right, it does. We looked at Procter & Gamble this morning. Okay, right there, check it out. But we didn't buy Procter & Gamble this morning. Who came up with Procter & Gamble? Mark. Okay, Mark, we did look at Procter & Gamble this morning. Today's Monday. I do almost 100% of my buying on Mondays. Most of my buying is done on Mondays or Tuesdays if there is no Monday, the beginning of the week. Procter & Gamble at the high at 180, bottomed out at 140. Perfect setup right there. Let's zoom into that. Perfect setup. Look at this. 30-day high, 30-day bottom, 1-2 days to the upside, the third day right here. But 143, well, the 143 is going for 149. But I'm losing 46 cents right on the top. You take that 46 cents off of there, I'm not making my 1% anymore. So we did look at Procter & Gamble this morning, and this number here didn't equal 1%. So we said, thank you kindly, but not this week. Okay, Black Swan event. Do I only trade the market opening? Yeah. I have better things to do to my day than sit in front of the computer. Okay, so I do my trades. See, I have a morning trading group. Okay? See, I've been doing this for a long time, and I've been averaging over 1% a week for the last 15 years. So a lot of people find that interesting and they want to know. So my morning trading group, people get to watch over my shoulder as I do trading on 3 different separate accounts. So, and then it's open microphone. You can ask whatever questions you want. I even take a look at your accounts and see what it is you're doing incorrectly and guide you. And I can't tell you what to do, and I will not tell you what to do. But I will guide you and say, wait a second, I love Procter & Gamble. I do. It's a dividend king. 5 decades of profits, increasing profits year after year. But it's not paying 1%, just a smidge below. But if you like it, let's check it out. The 143s, what are the 143s going for? Covered 143s right there. One contract, right there. The market, there we go. Here we go. Here it is right there. Profit 104, investment 14. Well, let's get out the calculator. So if my profit's 104, my investment is 14,196. That gives me a grand total of 0.7. That's 0.75%. Now don't get me wrong, 0.75%. Let's multiply that by 52. How much is that by the end of the year? 38%. Now I like Procter & Gamble, but there are other companies giving me more than 38%, so I'd prefer not. Having trouble finding those that fit your guidelines. Mikey G, come on, you've been here long enough, you know. Good evening, sir. I value your wisdom, slowly attempting to transition to your strategy. Take your time, Nicole. Seriously, take your time. Paper trade first. Mindy means never mind. What does that mean? That's not what it means. Who do we have over here? FC Dallas, how are you today? Dev, good evening. How are you doing? Okay, oops. I don't even know if is that a stock? Oops. What do we have over here? QBTS. Didn't we look at QBTS? Beachgoer, you will pay 20% since you are not holding for a year. Okay, Beachgoer, I'm going to disagree with you. Okay, now the reason I'm going to disagree with you is you don't have to pay taxes if you don't want to. Wait a minute, let me back up. You don't have to pay income taxes if you don't want to. Okay, if you want to, fine. Go ahead. Okay, depending on how you have your account set up will dictate how much you pay or how much you do not pay. It's a personal preference. MLPI, new MLP, high div ETF. Hey, Sweet Dan, how are you today? Nice going there, brother. Okay, MLPI, never heard of it. Never heard of it. MLPI. Let's delete that. Go back to where we were. And put in MLPI. NEO's MLP Energy Infrastructure High Income ETF. Terribly sorry, dude. No options. It limits what I can make. I'm looking to make 1% every week, which means MLPI, I would have to sit and stare at this all day long. Yeah, no, thank you. I want to get in, I want to get out, I want to make my 1% for the week, and I want to just move on with my day. Whatever it is I choose to do that day. And it's not sit in front of the computer. La 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 la. Wow. Oh, okay, here we go. What percentage annually do you usually end up with? It averages between 40 and 70. What program are you using? Okay, I'm not using any program. This is called Think or Swim. It is a trading platform through Charles Schwab. Think or Swim is, I'm in Australia. We don't have it. I have to use Interactive Broker. Well, you can do covered calls in Interactive Broker, or you could use a VPN, a virtual private network, which means you can sign into anywhere. Thoughts on the new MPL ETF? Nope. John, 2 decades. 2 decades of increased profits. I don't want to look at anything unless it has 2 decades. Now, the reason for that, John, is I'm 61, which means I'm going to be 62 in a couple of weeks, and then I get Social Security. The amount of money that I have has to last me the rest of my life. I have no desire for a new player. When it gets to 20 years old and has 20 years of consistent profits, then maybe I'll look at it. See, I'm not looking to make huge amounts of money. My main concern is consistency of profitability and preservation of my capital. I want the money to keep coming in so I can pay my bills. And I don't want my account going down. And a new company that has no historical performance, yeah, no thank you. Let me grab this. Holy cow, it's 20 minutes of 11 already. Let's get comfy. Let's get comfy. What do we have down here? Will your coach teach you off? Yeah, it will. Yeah. Okay, yeah, Dev, I do have a course, but I'm not trying to sell that course. I'm just trying to share information. I'm not trying to sell anyone anything. Vino, good to see you too. Bitto isn't an old company. No, it's not. Yeah, Dylan, you're right. I didn't say I was going to buy it, did I? I said, if you put it up, I will take a look at it. Ooh. Mayhem Maidens wants to take a look at Macy's. I love Macy's. I do. There we go. But not this week, Mayhem. Check it out. The top is right here. Now she's pulling back. Let's zoom in a little closer so you get a better look. Okay, she shot up, pulled back, shot up again. Now it dropped. So if you really like Macy's, give it a little bit. Dr. Dev. I get that one. Mindy, PGR. What's PGR, Mindy? PGR. Progressive Corporation. Why have I never done Progressive Corporation? Dustin, do you only sell covered calls? What's tomorrow's play? Okay, see, Cal, you weren't listening, were you? When I say I do most of all my trades on Monday, that means I have no plays to do tomorrow. I buy on Monday. The only thing I do Tuesday, Wednesday, and Thursday is just check my positions. Marlene, retirement income, Social Security, you invest stocks. They cut off check retirements, make more money? No. Because, see, it is my retirement income. That's got nothing to do. It's not a business. It's not a job. Okay? It's my own IRA, my own individual retirement account, which self-directed, which means I get to trade it. See, you only get a deduction in your retirement Social Security if you have a job. Kiss, hey, Papa G, did you already look over Hewlett Packard for tomorrow? Not yet. We'll take a look at it in a minute. So Dustin Lopez, do I only sell covered calls? No. But that's the only thing I share here. Okay? Because you got to take a look at it from my point of view or from someone else's point of view. I'm not going to share everything I know. That'll take way too long, number one. Number two, you should start off with something that's simple, easy, and profitable. Once you understand that, and once you perfect that, then start asking questions about other stuff. So Mindy wants to take a look at Progressive. Before we do, I want to go and see, is Progressive consistently profitable? PGR. Let's find out. Let's go back to 2006. And here we go, right here. Okay, that's 0.7. Goes up to 3, then it goes to 0.9, 0.9, then it goes to 2, then it goes to 14, then it goes to 16, then it goes to 1, then it goes to 39, then it goes to 40, then to 1, then to 20. Oh, hell no. Who came up with this? Mindy? Mindy, hold on a second, Mindy. 2006, 0.7. Higher, lower, same, higher, lower, higher, higher, lower. Higher, higher, lower, higher, lower, higher, lower, higher. Higher, lower, same, same, higher, lower, low, same. Yeah, no thank you. Can't make up its mind whether it wants to be profitable or not. J.D. Cunningham, A-E-E. Oops. I have no idea what that is. A-E-E. Let's find out while he's doing that. So anyway, Dylan, Bitto isn't on my list unless one of my investors asks me specifically to do it. Do I like Pink Floyd? That's a silly question. Of course I do. Because all in all, we're just another brick in the wall. Hello, is there anybody in there? Just not if you can hear me. Is there anyone home? Stopped cash. Thank you. I didn't know stock options are under $10. Absolutely. Dustin, I have a Pink Floyd tattoo. Money, it's gas. Don't want right, Jack. Keep your hands off my stash. All right, how do you see coin and PLTR in the next 6 months? Okay, hold on. We're looking at AEE at the moment. They got dividends, 16, down 10, 11. Oh, all right, wow, jolly good. Oh, hell no. Who came up with that one? J.D. Cunningham. Check this out, J.D. I'm not quite sure you saw this or not. 2006, 20 years ago. Okay? I know, 20 years ago. 63.5. 63.5. 63.5. 63.5. No change at all. 63.5. 63.5. 38.50. Holy shit, it cut it in half. It did. It cut in half. 38.50, 38, 38, 38, 40 cents, 40, no change, 40, no change, 40, no change, 41, 42.5, 44, 45, 47, 49, 51, 55, 59, 63, 67, 71. Okay, so the last 10 years are doing halfway decent. But for the most part, for the first 10 years, I'm like, no. Okay, so let's take a look at AEE. I'll give you the benefit of the doubt, all right? AEE. Hell no. I don't do monthlies. January, February, March, June, those are months of the year. I don't do monthlies. Thank you, I didn't know. Okay, AEO. Oh, I like AEO. AEO, American Eagle Outfitters. Nope, not this week. Check this out. Here's the high. She just dropped. Wait for it to bounce off that bottom. Johnny Boy, TRIN. Trin. What the hell is Trin? TRIN. Trinity Capital. Hell no. I don't do monthlies. The numbers just don't work for me. I'm looking for 1% a week. That's 50% per year or more. Monthly, I can only trade it once a month. That's what, 12 to 24% a year at 1% a week? At 1% per option? Yeah, no thanks. How do I see coin? I don't see coin at all. It's not on my list. Interesting. COIN. So how many dividends has coin been dishing out? Let's check it out. Coin. Oh, no dividends at all. Why would you come to a dividend channel with a stock that has no dividend? PLTR has no dividends either. What program am I using? Suavemont. This here is Yahoo Finance. Okay, you're going to be doing this? We missed the move on ZPPHM. No, we didn't. Dustin wants to take a look at SoFi. No. Pfizer, yes. Neo, no. Cliff, no. Okay, now out of all those, Dustin, Pfizer is the only one I liked. PFE. The only reason I like PFE is because it has weekly options and it has profits. Okay, the top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up, down. So it's coming down at the moment. Let's zoom into that. Okay, the high, the low is, look at this. Down, up, down, up, down, up, down. What's going on right there? Because bottom's here, she's shooting this way. The 22.49. All right, so that's 25.27. The 25s are going for 40. The 25.50s are going for 15. No, because see, it's a 25.33. If I do the 25s, I'm walking away. No, I'm not walking away with enough money. Sorry. John, PHM. What is PHM? Pulte Group. Ooh, hell no. John, take a look at this. Okay, John? Bottomed out at 116. Gapped up, kept on going. 116 to 134. Okay? 10, almost 20 bucks on a 116 stock. That's 13 to 15% increase between here and here. What makes you think it's going to continue going up? The way I look at it as an investor, I don't know if any of you agree with me, but as an investor, the bottom over here, and it shoots up over 10%, yeah, there's going to be profit taking coming soon. That's not a game I want to play. Dustin, you got it? Sticking to Pfizer, you got it. GLW, wait a minute, GLW. Isn't that Granger? No, wait a minute. Corning, GLW. Corning, okay. The top, the bottom, where was it? Where is it? Look at this. Down, up, down. What's going on there? What's going on? Okay, the top, the bottom, back up, back down. Yeah, no, it's coming down at the moment. Give it a little bit of time. Sorry, Rob. Okay, so let's get back down here. Take a look at you guys down here. What's going on? What's going on, Snake Anthony? Just checked it out. Love it. Nice. Thank you there. Martin, this is not how to value a company. Eli Lilly is partnering with NVIDIA to create AI-generated medicine. And what does that mean? Eli Lilly's over $1,000 a share, okay? They offer about a 2% return on a weekly basis. NVIDIA, in my humble opinion, is a piece of crap. The reason I say that is NVIDIA is, what is it, $185 and it pays a 1 penny dividend with a 0.04 rate of return? Hell no. Who came up with that? Martin. Martin, I'm going to do this just for you. Are you ready, Martin? NVDA. Okay, just for you, Mr. Martin, because you seem to like NVIDIA. So let me show you why I don't like NVIDIA. Now, I've been investing for over 30 years, and I've never seen anything like this. $184 per share. The dividend is 1 penny. Yeah, you heard me right. 1 penny for a $185 stock. You do realize that is 0.004% return. Gets worse. Hold on. Let's take a look at the statistics for NVIDIA. Okay? Let's take a look at the statistics for NVIDIA. You like NVIDIA? Wonderful. Let's take a look. Here we go. NVIDIA. Revenue per share. Okay? Are you paying attention? Revenue per share. $7.67. $7 per share. It's a $185 stock, and it has a $7 per share revenue. Okay? Hold on. Gets worse. Okay? Diluted earnings per share. $4 per share. That's it. $4 per share. Okay? Hold on. Book value. Book value. $4.89. You have any idea what the book value is? The book value is the actual value of the company. You liquidate that company, all the real estate, the buildings, the paper clips, the trash bags, the trash barrels, the desk chairs, the broken up file cabinets. You sell it all off. What are you getting for your money? $4.89 a share. That's it. And the yield, where is it? Payout ratio is point there. The yield. Oh, look at it. The yield went up. Check it out. The 5-year average dividend yield. 5-year average dividend yield. 0.06. It went up. It was 0.04 last year. 0.04. But now it's at 0.06. Wow. Yeah. No, I don't like NVIDIA. Terribly sorry. Eli Lilly, let's check that one out. LLY. Eli Lilly, $1,000 per share. Revenue, $66 per share. Earnings per share, $20. Book value, $26 per share. You like those numbers? Sit tight for a second. Let's take a look at General Motors, GM. Okay? It's $83 per share. Revenue, okay? You seen this? Revenue per share, $189 per share, $189. Okay? Diluted earnings per share, $5 per share. Let's go down a little lower. Book value, $71 per share. You can look at whatever statistics you want. You take a look at the book value, you take a look at the earnings per share, you take a look at the revenue per share, you take a look at what's coming in, what's going out, which is a better company. General Motors has better numbers. Okay, the dividend's a hell of a lot better than 0.06. I don't like either one. But that's just me. What the hell do I know? Okay, let's go back. What else are we looking at? Ooh, Jane wants to take a look at Nextera. Uh-oh. Jane, Apple? Uh-oh, I missed some. PHM did that one. Dustin got it. All right. Killing them. Google, really? Google has 2 years of dividends. 2 years. No. Apple. Is Apple on the list this week? I don't think they're on the list this week. AAPL. Ooh, check that out. Maybe. Here's the top. Here's the bottom. Here's where it was. Here's where it is. She drops, shoots up, drops again, turns. That's what I'm looking for. Okay? The bottom for the year shoots up. There's the top of the year. There's your profit taking right there. Profit taking. Now it's bouncing off that profit taking. Let's zoom into that. Okay? The high, the low, 1, 2. 2 days up, 260. The 260 is going for 293. That's more than 1%. Let's do that one. Okay, covered stock, the 260. There it is. One contract. And at the market, there it is. And here's Johnny. Buy one covered call Apple. 16 January. The 260 call option. 333 is the profit. 25 G's is the investment. What were you thinking? It's Apple. Of course, it's $260 per share. So 100 shares is 25 grand. But what is the rate of return? Rate of return? 333 is the profit. We divide it by the investment, 25,667, and that gives me a rate of return of 1.3%. If you like Apple. Well, it's a question. Do you like Apple? Is it a company you want to buy and hold on to? Well, here we go, right here. There it is. Apple, 16 January, 260 call, 250, wait a minute, 333 is the profit, 25 is the investment, 1.3% return for 4 days. If you like Apple. So Martin, sorry to pee on your parade, dude, but NVIDIA doesn't thrill me at all. I'm a numbers guy. 1 plus 1 is going to equal 2 no matter where you go. I can buy a $10 stock and make 1% every week. That's over 50% per year. NVIDIA is paying 0.06% per year. Why the hell would I want to put my money there? I mean, don't get me wrong. It's great as a, what do they call that? A growth stock. Growth stocks don't give me cash flow. I have no desire. None. And that's 4 for today. 1.3. 1.3. So we had 4 last night, 4 today, and it's 11 o'clock. It's that time of day. There we go. What else do we have? Riley, Black Eye Joe, love Riley. Have some of that, but it's going bye-bye. And, Joe, it's at the high of the year. Why would I want to buy it? Think about it, Joe. Let's get this out of there. Riley, R-I-L-Y. Okay. R-I-L-Y. Okay, why would I want to buy it, Joe? It's at the high of the year. I don't buy anything at the high of the year, Joe. Sorry. Thoughts on Nextera? I love Nextera. N-E-E. Check it out right there. It's bouncing and turning around. Looks pretty good to me. Okay? You got your 30-day high, your 30-day bottom. It dropped, went sideways. Here's your bottom right there. 1, 2 days to the upside, and your third day there. The 81. The 81 is going for... Hold on a minute. Before we go, 81 is going for 89, which is over $1, which is over 1%. Yeah, I like Nextera. All right, so we're at 11 o'clock. That is it. Meta, hell no. You're welcome. Thank you, Jane. Spot, he's using Thinkorswim. Complete nonsense. Fireball. Gotta love it. I love it meeting not nonsense. I've made over 50% in less than half of a year with this nonsense. Thank you, Tuck. Tommy Cash, how are you today? Fireball, it makes complete sense. If you don't understand something, it's what James is here helping. Thank you, Tommy. Fireball. Oh, why can't I? Okay. Mute my view. I can't. I wanted to respond. Why can't I respond to his nonsense? Sent comments recently. They keep commenting on your engaging live. Okay. So why can't I? Oh, there it is right there. Reply. Let's do this. Thank you there, Mr. Fireball. I always love it when a troll tells me something that I don't already know. There we go. See how he likes that one. All right. Don't. Where are we? Wow, I missed all these questions. All right. Tommy Cash, how do I join the group? Okay, Tommy, I promise I don't try to sell anything while I'm here. So if you want, DM me your number, I'll give you a buzz. Okay, Nanny, Lockheed Martin, we'll take a look at it tomorrow. Now, tomorrow, I'm going to be in Dallas. So, if you want to, so I'll be broadcasting from Lake House. That ought to be fun. I got to figure out how I'm going to do that, though. Mikey's doing it for a friend. Okay. How do I join the group? Yeah, you can DM me or you can go right to the 10-MinuteTrader and the big black button that says live trading. That's where you can do that. What do I think about shortened ANF? What the hell is ANF? Never a good sign if I have to say ANF. What the hell is that? Why would you short that? Hold on a second. Who came up with that? Okay, Roger. Check this out, Roger. Here's the previous bottom, just before Thanksgiving. Shoots up nicely and had this big gap down. I love gap downs because gap downs have a tendency to go up and fill. So at some point that will turn around and go back up. But I would wait until it turns at least 2 days to the upside. Dustin, thanks for the lesson. JD, you're welcome. Jane, you're welcome. I've got 10 grand to start learning, wanting simple, safe, covered calls. Appreciate the info. Okay, Dustin, what I'm going to suggest, okay, paper trade for a while. Okay, Thinkorswim actually has the opportunity for you to paper trade. So you go there and you just sign up for a paper trading account and you just make the trades. Safe travels. Thank you there, Miss Jane. So what do we have down here? Nice to see you as well. Thank you, Dev. Mara. I like Mara. I like Harley Davidson. I like Riot, not King or Aristocrats. Why trade on website 2025? Well, because when I invest for other people, they say, hey, James, can you buy me this? I say, okay. But you're right, they're not on the Dividend Kings or the Dividend Aristocrats. TSLL paid me 53 cents. Okay, got it. Detroit, a leveraging WTF with a dividend. Okay. Mike Murphy, do you have any ETF stocks? I think I do. And if not, why not just asking? Okay, most ETFs, well, I should say some ETFs don't have weekly options. Some of them do. The ones that do, well, I don't buy them to hold. I buy them to roll forward and collect 1% on. So if they do have weekly options, do they have the ability to give me what I'm looking for? Look at bets. Why am I looking at bets? B-E-T, is that Z? Z. Round Hill Sporting Bets. No. Because I don't think they have 20 years of profit. And they're a monthly. I don't do monthlies. You see this? Those are months of the year. I don't do that. AbbVie. Ooh, I love AbbVie and I love EOG. Observation for a stock that dropped a lot. EX bought 91. Today, 83. Call under 91. Rich Canyon, you want to send me your number, Dukes? I really don't understand that. Chris Foti, Coles, we'll look at it tomorrow. Nanny, Kimberly Clark, tomorrow. What about credit spreads? I love them. I do. But I'm not going to share them here. I forgot you sold courses. Can we get them added to the website? Yes, we can. What are you looking at? Looking at bets. Not something that I do. Could you grow a $500 account? Yes, you can. However, it's going to take a longer time. Good night, Dr. Dev. NVO. Ooh, I got that one. When? Roger will take a look at it tomorrow. $20 a week at 1%, $500 investment 50 times. Thank you, Nanny. Where is this posted, Schwab? Okay, Wall Street 007. This is Think or Swim. It's not a Schwab account. Schwab owns Think or Swim. Now, Think or Swim was a standalone agency many years ago. They got bought out by TD Ameritrade, who got bought out by Charles Schwab. And Charles Schwab decided to keep Think or Swim. Richardito, they want a quick buck and 50% up in 1 week, like a gold leverage ETF, Nugget and Shiny. Yeah, I get it. There are people out there that want that, and some people can get it. Tommy Cash in Yahoo Finance right now. Thank you. Nice try. Your contribution is commenting. Keep up the energy. Thank you. Wen, thank you. Roger. Okay, we'll look at it next time. What dividend stocks do you recommend then? I don't recommend anything. I recommend you do your own research. But you could start with the dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. That would be a good start. Thank you there, Deb. Catch you tomorrow. Love them and leave them. Thank you, Lemonade. Oh, yeah. Nintendo, please check out AbbVie and EOG. We'll do it tomorrow. I threw 600 in a penny stock. Do you think I'm screwed? No. I have no idea what penny stock it was, and I have no idea what's possible with that penny stock. Could be. James, if you don't mind, can we do a quick? Oh, hell no. Vino, JEPI, hell no. Do yourself a favor, brother. Check out the numbers yourself. How often has JEPI increased its dividends? And for how many years? JEPI is not consistently profitable. And they have not been around for 20 years. So, now Vino, for you, it might be fine. Okay? Me, I'm already retired. So if the company is not giving me 1% a week, why would I put my money into it? And if they don't have historical performance, which means they have not done it over and over and over again. You actually sell before the EX dividend date to collect 1%. Absolutely. Arvilo. Think about it, Arvilo. Okay, just before the EX dividend date, the stock has a tendency to go up in value. So wouldn't it make sense to buy it before then? See, check out my calendar. Okay? Arvilo. What do we have? General Electric, Micron, John Deere, Illinois Tool Works, Annaly Bank, U.S. Bank, Nucor, Campbell Soups, American Express, Bristol Myers Squibb, Cardinal Health, MasterCard, Intuit, Marvel, Oracle, Toll Brothers, AbbVie, General Dynamics, Abbott Labs, Comcast, Verizon, AT&T, Hormel. That's just some of them. If you look at good quality companies that you don't mind owning, buy it just before the EX date. I like 2 weeks. 2 weeks, 1 week, 2 weeks, EX date. 2 weeks gives it plenty of time to make a move. Are you on timer? And what time? Oh, am I on tomorrow? Yeah, I'm on every night. Sunday, Monday, Tuesday, Wednesday, Thursday. I don't do Friday nights anymore, and I don't do Saturday nights anymore. Okay? Yeah, tomorrow night, 9 p.m. Eastern Standard Time. And no, I'm not going to do JEPI. It's check out the numbers. Look at them yourself. Hi, how do you close your position? Usually I let whoever bought the option buy the stock and take the stock away from me and pay me all my money. I know nothing about this stuff, but very interesting. Actually, Leo, you know more than you think you know. Okay? Hold on a second. Okay, perfect. I'll be back on with a list. Thank you, Brock and Larkin. Have a good night, you too. Greetings, James. CVS. I like CVS. Do you like SNDK? Is that SanDisk? I have no idea. Estrar Cab, Derek. I have no idea what that means. Just roll it if you aren't, if you're that hungry. Thank you, Benjamin. I'll have to learn what a roll means. Oh, vino. Oh, vino. If I knew what a rolling was years ago, I wouldn't have lost all that money I lost years ago. Taxes are 4% on the unprepared. I like the way you say that, Benjamin, on the unprepared. Yeah, get yourself prepared. You don't have to pay any cut. You don't have to pay any taxes. Logan Buck, am I a fan of Coca-Cola? Yes and no. Okay, they've been in business for over 140 years. Okay, they have increased their dividends for more than 5 decades. They're a great company. However, the premiums really aren't that good. So I don't buy it that often. Very rarely will I buy Coca-Cola. Jazz, hey, you a swing trader? No, I'm a weekly trader. NOK, Nokia. Let's take a look at tomorrow. Hi, man, how are you? Glass Pearson, how are you? Can you mirror the screen so the text is not left from right for us to read? If you know a way for me to reverse everything, I'll be more than glad to do it. But if you go to my YouTube channel, you will see that I have 1,500 videos. And no, none of them are AI. They are all live, and they are all just like this every single night. I do this every single night for the past years. But it's a YouTube thing. You can take a look at all the videos on the cell phone, on the iPhone cell phone, for me to talk to you like we're talking right now. You got no other choice but to have the words backwards. Sorry. Okay, I got 9 different channels. If you don't want it backwards, you got to go to a different channel where it's not backwards. But on YouTube, unfortunately, it is. Crawford, Jason, how are you doing? PBR. Oh, wait. PBR. Peanut butter and raspberry. That's, wait a minute. Something, that's I forget. It's a South American oil company, that much I know. Monster Beverage. Yeah, take a look tomorrow. Enbridge, hell no. Good night, Dev. Good night. Where are you reading the chart? Okay, Glass, I told you, I got 9 different channels. This is just one. I got channel over there, channel over there, channel there, channel there, channel there, and one more down there. Okay, so I got 9 cameras. I'm streaming on 9 different channels. So I got 8 iPhones and 1 webcam. Okay, so yeah. Is a stock ticker COM worth buying? Not for me, it's not. You take a look at the profits, take a look at the dividends, take a look at the consistency of profitability, and then take a look at what is the stock doing right now. Is it favorable for me to buy or is it not? COM is not one of those that I buy. Sam Fan C-Same. How's it going, Sam? You don't talk about risk. Is there risk? Everett, how are you today? Everett, you do realize being human is risk. You stay in bed, you risk the ceiling falling in on you. You risk someone crashing into your house you walk out your front door, you risk getting hit by a tree. You're at risk of getting hit by a car. You're at risk of anything. Life is risk. You want to talk about monetary risk or buying something and risking your money? Well, if you don't do anything, you risk not getting anything. You risk losing money through inflation. Okay? If you jump into something, well, maybe you'll make something, maybe you won't. No risk, no reward. Plain and simple. Money 24/7, that's a no. Gotta love it. WPM, I have no idea what that is. Joshua, how are you doing today? Let's take a look at tomorrow. Hello, boss man. New here, wondering what your thoughts are on gold. Could you be more specific? Because see, gold is not something you get a weekly cash flow from. It is a storage of wealth. Just like this is a storage of my beverage, whatever I'm drinking, which is tea. So gold is a storage of wealth. It doesn't have very many industrial uses. But if you're looking for a bullion that's really going to be good and going to go somewhere, you should check out silver and what's happening with silver lately. Hello, James. What do you think of SCHD? Oh, hell no, Michael. Michael, go check out SCHD and see over the last 2 decades, that's 20 years, how consistently profitable has SCHD been over the last 2 decades. I lost you earlier. Okay. Mike, Altria. Love Altria. Okay, so that's everybody. We're going to call it a day, and we're going to do this all again tomorrow, but tomorrow it's going to be a little different. And the reason why it's going to be a little different tomorrow is I'm going to be in Texas at the lake house, and I have no idea what the setup is going to be. So how are we going to do it? We'll find out. Stay tuned, and we'll see you all tomorrow night. I'm kind of excited about going to Texas. Anyway, have a great night, everyone, and then we'll do this again tomorrow. Tomorrow. We'll see you tomorrow. You're always a day away. The sun'll come out tomorrow. Wipe away the cobwebs.